You have short term, you have long term. Anything under a year, it's about 48% you have to pay the government. Those are short term investors, like especially like those people that do forex trading and option trading. But if you're a long term investor, if you wait after a year to cash out your stocks, it's only 15%.
Oh.
So you want to hold on to your stocks to after a year, so you don't have to pay the government that much money.
So anybody that's on these apps like Robinhood or
well, Robinhood, Webull,
say they want to take out 100,000. Say they just like last week they put in $50. Next you know they got $100,000 profit.
Right.
If they try to take that 100,000 out, they got to pay the government half of that.
It's not even, somebody has to buy those stocks that you're trying to cash out, right? So once somebody buy, once you sell your stock, you only paid $100 for that stock.
Yes.
And let's say you made whatever 100,000, you're gonna have to pay taxes on that $99,900 you have to pay taxes on.
Oh wow! So people don't even people that don't even know that thinking that they're gonna get all that profit, but they really got paid almost 49% tax.
Yeah.
Almost?
Yeah. My brother started me off on this guy. His name is Jeremy. Jeremy Financial Education on YouTube. He said, before I even get you into buying stocks, you have to know your terminology and stuff. You have to know what these people are talking about. So he has 3 YouTube channels, and I started off looking up stock definitions. What is a bid? What does the New York Stock Exchange mean? What is capital gains? Like different terminologies that they use in stocks and stuff like that. And I had 7 pages worth of stuff to look up. I had wrote it out like I was in school. He said, look, this is your money. Your mind is on your money, money on your mind.
Yep.
You have to sit there and you have to be diligent like you in college.
So these kids that think they could go into like these stocks and put in, say they want to put like 10 G's.
Mm-hmm.
Say the next day they profit 100 G, right?
Mm-hmm.
They think, okay, we're just gonna get 100,000 the next day. It ain't gonna happen.
Government is coming for you because
government will take half of that money.
Yeah.
So it's better to wait a year, then take the money where you only pay what 15%.
Yep. Look up short-term gains and long-term gains.
And
that's the things that I learned about watching that channel, and I bought me some books from Amazon learning about stocks.
A lot of people don't know that about these Robinhood apps and these Coinbase apps. That's why it's better.
Even that's not even an app. Even if you go through a regular broker like Charles Schwab, Merrill Lynch, or whatever, and you let them do the investing. Let's say some hardship come up and you need to take out some money, so you want to sell some of your stock. So you got to contact their broker to sell that stock, but you're gonna have to pay taxes on whatever capital gains. It works the same like, let's say you buy a stock and it's not doing well, and you paid whatever $5,000 for the stock, and now the stock is worth $2,000, and you want to sell it. So you had a loss of $3,000, but guess what? You can write that off on your taxes.
Tax write-off. Yeah.
Right. It's only up to a certain amount, and I haven't got to that point where I had to sell off anything where I have to take a loss. But yeah, you get to write off your losses.
So just because a stock goes up overnight doesn't mean if you cash out really fast and that you think you're going to have a profit, it's really not.
You ain't going to have that much big of a profit because the government's going to take, they're going to take their amount.
Yeah, there's a little things in there. It's good to be knowledge, have
and
the knowledge.
it was more easier for me to listen to this guy, Jeremy Financial Education, because he makes it fun to learn and everything like that. It's like, okay, I get it. Because reading a book doesn't always hit it for you. So when I had spare time, instead of sitting there watching Netflix movies and watching all these sad news shows and all that stuff, I was listening to him.
That's the way to go right there.
I'm listening to just get different perspectives from different YouTubers who dealt with investing.
So how about if you wanted to take out, like say 5,000? Is it still going to be the 49%?
Listen, anytime you made a profit, if you paid $100 for the stock, and you made and you cashed it out for $110, guess what? You paying taxes on that $10.
Doesn't matter the amount.
Right. Because as long as it's a capital gains tax. As long as you gain money from it, you got to pay taxes on it.
So the minimum is going to be 15% after a year.
Yeah.
Pretty much. It's always going to be 15%.
Yeah. Those people that do short term underneath a year, if you sell it 3 weeks later, or week later, or 6 months later, you got to pay capital gains tax of about 48%.
Yeah, so it almost makes sense.
That's the thing.
It makes, for Bitcoin especially, this makes sense to keep the Bitcoin in
Yeah,
there.
yeah, because you're
And just
looking
use
for
it.
growth. Yes.
You're not gonna make that much of a profit.
It's not. It's you don't do a Bitcoin and then sell it in 6 months later. No, no. Okay, especially if you know cryptocurrencies of the future. But
Yep.
when, so you want to hold on to that, whether it's 2 years, 5 years, 10 years. This is something that's long term, that's generational wealth that you could pass on to your children. And then if you have money like that, what you want to do, make sure you got your financial stuff in order. Like set up a trust fund for your daughter. Don't have her go out there messing up your money. You done left her like whatever 2.9 million or 900,000, and then she out there. If you want her to get a certain amount of money at age 21, 25, or 30, and then because it's in the trust, if she decides to get married, her husband can't touch it. If she decides to get divorced, her husband can't touch it. It will pass on to her children. You understand?
I see what you mean.
So that's why you think all these people like Kim Kardashian and Paris Hilton got their trust fund babies.
They got all that money.
Yeah. Money that their father and their mother and them left them. It's like, I ain't gonna leave you all this money and this man sit here and mess up your money and mess up your head. You get a certain amount of money you can have designated each year to go to her for living expenses if you want.
So like I had on the Robinhood app, I bought I think it was some stock. It was like $4,000.
Uh-huh.
A few days later, I sold it, and it was like $4,400. But I kept it in the app, and I didn't want to take the money out the app, so I just rebought some more $4,400 more Bitcoin.
Uh-huh.
So it doesn't
still
mean they're
gonna
gonna
pay
tax it.
taxes.
I
Yeah.
still got to pay taxes if I try to take it out.
Uh-huh. You still gotta pay taxes.
Still got to pay
Try to take it.
taxes.
Mhm.
Yeah. As long as you keep it within, and you just keep it in there and not take it out.
Uh-huh.
Oh. See, it's good to know that. I never even knew that stuff.
Yeah, you gotta listen. When you start having big money and you start putting it in buying ETFs, bonds, mutual funds,
Yeah.
stocks, you gotta know what you're doing. And if you don't, if you don't have a financial advisor, you can always YouTube it and ask questions under the comment section and stuff like that.
Yeah. Yeah.
Listen, you have people that went to prison and learned about stocks in prison. The Wall Street Trapper, I think he is.
Oh yeah.
That came out making money.
They knew
I
it.
follow these guys on YouTube called Earn Your Leisure, EYL University.
Yeah.
Yeah, they have a podcast also. It's all about building generational wealth, and you wonder how the wealthy stay wealthy. Because the first set of videos my brother showed me, I'm going to show you something that Jeremy showed, how you have the poor, the middle class, the rich, and the wealthy. And he's talking, and with Earn Your Leisure, they talk about assets over liabilities, and how the wealthy stay wealthy. And they keep flipping their assets to make more money to buy more assets.
That's new information I never even knew today. I appreciate you telling me. Because I was actually thinking like you just, you sell your stock and you get that money, into your bank account. But I didn't know that the government's going to take.
Yeah, they're going to send you a bill talking about you got some capital gains, you need to pay some taxes on that.
Yo, that's crazy. I never knew that. It's good to know that kind of stuff. Like I said, I'm just following a lot of my friends that get into this. I just follow their advice. And,
Yeah, but you got to ask them, like, look, you ain't going to get nothing for something.
yeah, there's no
Or
way.
something for nothing, as they say.
Exactly.
Government's like, what? You want to make all this money off this stock and think you ain't going to get a piece of it?
Yeah, I knew there was some kind of taxes, but I didn't know it was going to be like a 49%.
Yeah, it's
tax.
for short term.
Short-term trading.
I mean, it's the motto. This is like, while they sleep, we eat. That's
so
why.
that controls like so that controls the market technically with that tax, because everybody will be taking the money out the next day.
Yep.
But they're afraid to do it because of the taxing.
Yep. I mean, it's different types of trading. I haven't really gotten into forex or option trading and stuff. I'm looking for stuff long term where, you gotta look at the company, look how they run the company, where they see they're gonna go. Are they making profits? Do they got too much debt to cash ratio and stuff like that?
So if
That's a lot of
the
research.
stock market crashes, and say you got 100,000 in your bank, stock market's gonna crash. You can't even get your 100,000. You're gonna walk out with like 50,000 of that.
First of all, when the stock market crashed, that means that whatever profits you had, if you have $100,000 in profits or whatever, it might bring you down to $20,000 in profits, right?
Yep.
But that's the time when you want to buy, like when Corona happened in March of 2020.
Yes.
When the stock market dropped, that was the time to, if you have money, that was the time to buy stuff, because, you know, the market ain't gonna stay down for no 4 or 5 years or 4 or 5 months. It's gonna come back, it might come back slow. But that's when that's when it's like Black Friday sale. That's when you wanna buy, yeah.
You wanna buy during that.
Yeah, that's when you wanna buy. But you gotta learn how to invest in good companies that's gonna profit, right.
Ah.
Like a lot of companies that's taking big hits is like these food, like the what you